The stock of Hims was in a free fall after the company reported its fourth quarter 2024 financials.
Meanwhile, an earnings alert on Hims and Hers Health. Shares dropping despite a top and bottom line beat.
About a week ago, Morgan Stanley downgraded Hims on valuation concerns. In this video, I will talk about Hims' business, whether I think the stock is done, or whether this is a buying opportunity. Also, I'm going to tell you whether I personally own the stock or not. My name is Mariusz Konieczny, and I have been investing full-time in the stock market since 2009, and from that time to the peak of 2021, I turned $10,000 into $7 million. I'm also the author of 11 books on investing and the founder of microcapexplosions.com. Hims was born out of an unsolved problem. If you live in the United States, you know that the healthcare system is broken. If you have a health problem, it takes forever to get a doctor's appointment. And in some rural areas, there are even shortages of doctors. Then, once you have the appointment, you have to take time off of work to visit the doctor in person. You have to drive to the appointment for almost an hour one way. Then the doctor sees you for 20 minutes. The visit costs you as much as a mortgage payment, and then you finally get your prescription. So you ask yourself, was all of this necessary just to get my prescription? Well, Hims was founded to address these problems and inefficiencies. Hims is a telehealth company. Through its platform, you can book a medical consultation within 1 hour versus 24 days. Additionally, you can have your prescription personalized just for you so that the treatment is more effective and you don't have to suffer unnecessary side effects. With this amazing value proposition, revenues exploded from $82 million in 2019 to $1.5 billion in 2024. Gross profit margins improved from 54% in 2019 to about 80% in 2024. These gross profit margins are amazing. Free cash flow went from negative $75 million in 2019 to positive $209 million in 2024. And the stock price almost 20x'd from May 2022 to the most current peak. And actually in March 2022, I even made a video about Hims. Hims reported its 2024 numbers, and they were absolutely amazing. Revenues were $1.5 billion for 2024. Gross profit margin was almost 80%. Net income was positive $125 million. And actually, 2024 was the first profitable year in the company's history. And free cash flow was $209 million. And yet, the stock price was selling off. Why? It's all about GLP. In May 2024, Hims introduced its GLP-1 weight loss product, and this product became extremely successful. It immediately took off. And in 2024, it generated over $200 million in revenues. However, this news practically destroyed this product overnight. You see, one of the reasons why Hims' revenues have been growing so fast is because of personalization. The company is able to prescribe medications tailored to specific needs of individual patients. And this is done through compounding pharmacies. You see, when you go to buy something at a local pharmacy, you are getting medicines made by manufacturers. These medications are made for everyone. They are not custom made for specific patients. Compounding pharmacies custom make medications by making small alterations to branded products. This is what Hims did with its GLP-1 weight loss product, and FDA allowed this because semaglutide, the ingredient, was in short supply. So when the FDA said that semaglutide was no longer in shortage, this obviously created an uncertainty about Hims' revenue growth.
Hi, thanks for taking the question. And just really a numbers question here on the GLP-1 contribution this quarter. So it seems like for the full year, you guys were at, did you say 225 million or so of GLP-1 contribution? In my model, and in fact, I could be off in my model, but I had you doing around 75 million in 2Q and 3Q. So that would put the fourth quarter GLP revenue, somewhere in that $150 million range, which would be a pretty nice step up quarter over quarter. But then it does also imply very limited or even declining sequential growth in non-GLP revenue from 3Q to 4Q.
This is why the stock of Hims was selling off, despite the fact that 2024 numbers were absolutely amazing. You see, growth companies must grow, and if they don't, they get punished by the stock market. Is the current sell-off in the stock price a buying opportunity? Well, if you're looking at 5 to 10 years, then yes, this is probably a buying opportunity. The negative impact of the GLP product will not stop Hims from growing. Excluding the GLP product, revenues would have been 1.2 billion. So the revenue growth without the GLP product would have looked more like this. The revenue for 2024 would have been a little bit shorter. Hims was founded because there was a problem to solve. The healthcare industry is broken. The reason why revenues are exploding or the number of subscribers on its platform is growing is because the company is successfully solving these problems and inefficiencies. Originally, Hims started offering products for hair loss and sexual health. But as it grew its subscribers, it expanded into other areas. And Hims will continue doing this in the future. The story of Hims is just getting started.
2024 was an exceptional year for Hims & Hers. We believe that we are just scratching the surface of what our platform can deliver in the years to come.
Hims is disrupting an industry that desperately needs to be disrupted.
Over the past 25 years, Uber and Airbnb reshaped transportation and hospitality. Amazon and Shopify revolutionized e-commerce and logistics. Netflix and Spotify redefined media consumption, and PayPal and Square modernized digital payments. Yet we haven't seen a similarly transformative shift in one of life's most critical areas, healthcare. Recently, however, I've felt the same sense of disruption and possibility with what we are building at Hims & Hers.
In 5 or 10 years from now, are we going to move towards the new telemodel, or are we going to move back to the broken system where we have to wait 24 days to get an appointment? One of the reasons why the broken and out-of-date system is still in place today is because the old and sick people are just used to it. Millennials prefer teleconsultations to in-person appointments, and millennials are the future. Eventually, they will get old and thus have health problems. And if they want telehealth, then this will become the new normal, and companies like Hims will continue to grow. When Morgan Stanley downgraded Hims about a week ago, it was because of valuation concerns. So let's talk about valuation, because this is important. Remember, price is what you pay, value is what you get. To properly value the company and determine what the stock price could be in the future, we have to forecast the future. Today, we know that the company expects to generate between 2.3 billion to 2.4 billion of revenues in 2025. But I want to know what the financials could look like in 2030. And we kind of got a clue on this on the conference call. Remember, right now, Hims has over 2 million subscribers.
I think 10 million subs on the platform to me feels, really quite in reach, and I think, frankly, pretty straightforward from a growth standpoint. If you look at historical growth over the last 5 to 6 years, my optimistic hope and personally ambition would be to try to achieve this in the next 5 to 6 years.
With 10 million subscribers, I think that Hims could 5x its 2024 revenue numbers. So I think the revenues in 2030 could be around 7.5 billion. And I would say that with this kind of revenue profile, stock should trade for between 3 to 5 times revenues. And that's about 3 to 5x from the current stock price levels. Now, that's valuing it based on revenue multiple. Let's value it based on future free cash flow. And to do that, I'm going to use 3 scenarios. If Hims can achieve a 20% of free cash flow margin in 2030 on 7.5 billion of revenues, this would translate into 1.5 billion of free cash flow. And if we apply a 25 multiple on that, we arrive at 37.5 billion of valuation. That's about 4x from the current level. In scenario 2, the only thing that changes is free cash flow margin of 25% instead of 20%. The resulting valuation would be 47 billion, and that's almost 6x from the current stock price levels. Finally, scenario number 3 assumes 30% free cash flow margin. Under this scenario, we get a valuation of $56 billion, and that's 7x from the current stock price. Of course, the company has to deliver on this growth, and also the marketing expense has to come down in relation to revenues in order to achieve those 20 to 30% free cash flow margins. You see, right now, Hims is sacrificing free cash flow and profitability because it is spending massive amounts of money on marketing. And even with this big marketing spend, the company was still able to achieve 14% free cash flow margin in 2024. And actually, the marketing spend is already coming down. In 2023, marketing percentage of revenue was 51%. In 2024, this percentage was about 46%. As you can see from the income statement, marketing is the biggest expense. Also, marketing as a percentage of revenues is huge. This hurts free cash flow and profits in the short term. But that's okay because Hims currently is in a hyper-growth stage. The investment in marketing is successfully bringing in higher revenues. For example, the company had spent almost $500 million on marketing just in 2023. And this investment increased revenues by 605 million. So was it worth it? Absolutely, it was worth it. By 2030, Hims' growth will most likely slow down and stabilize. That's normal. And the company's marketing spend will decrease in relation to revenues. This will allow the company to increase the bottom line. Now, do I own the stock of Hims? No. And this is not because I don't like it. I like it a lot. I also like the current sell-off in the stock price. I think that the company has a bright future. I think that the stock will do very well over the next 5 to 10 years. So I don't own this stock because I focus mainly on small cap stocks, where I think I can get a little bit more value for my money. If you want to know what I own in my portfolio, watch the 2 videos that are suggested at the end of this video. With that being said, thank you for watching. Don't forget to subscribe to this channel, like the video, click on the notification button, and if you want to get notified about some other investment opportunities before I make videos about them, then sign up for my email list, with the link is in the description below.